still. Okay, now it's live. Very well. Welcome everyone. Good evening. Good morning. Good afternoon. Welcome everyone. Good morning, Pantelis, Jake, Peter. We have Lucas. Thanks for joining in. Roland, Libel Lopez, Desi just coming in. Oh, we have Sinatra as well today. Welcome. And IBY, Graham, Mystic, Adinda, Pan, Peter, Jake. What happened there? And Lee as well. Thanks for joining in. Welcome. Welcome, everyone. I'm Giuseppe Basile. I'm also known as the FibStalker. I promise that I only stalk price. I don't stalk people. And and today this is a new session of the FX Street Tokyo Open Live Room. Welcome, everyone. I'm glad you're here. This is a daily show where we feature real trading at the very heart of the Asian session with me. And this is a show that goes on daily from Sunday. It's not Monday, it's Sunday to Thursday. We take a couple of days off. We are a little bit misaligned with the with mainstream. We actually take Thursday evening off and Saturday evening off, and then we are back on Sunday mornings. As you know, I take trading and risk management very, very seriously. Indeed, I believe that job number one of trading is to manage risk. Forget all the gains, forget everything. Focus yourself 100% in getting risk-free trades that very, very quickly become risk-free. And we started this discussion yesterday, and then unfortunately YouTube said no, it said stop. And hopefully we won't have such an issue today. Now, trading is risky. Trading Forex and its derivatives, including futures options and CFDs and other instruments with retail off-exchange transaction, involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. You can actually get into debt, and that's because leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FX Street risk disclosure on the website. The information, including the commentary and trade ideas I'm going to share and provide in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. Indeed, the information and the material I provide in this webinar is for educational purposes. I'm glad and happy if you paper trade these ideas. I, Giuseppe Basile, FibStalker Consulting Inc., FS Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right, so thanks a lot for joining in. I read the risk disclaimer every day for you to remember that this is a business and business can be risky, and you have to know what you're doing. I also believe that trading with risk management and money management, proper money management is the key to success. So I will keep repeating this ever and ever. So welcome, Greg, Pantelis, Todd. I think we have a few other people joining in. I see some new names as well. Welcome, welcome everyone, and I hope you enjoy the show. And let's start getting into it. So I'll just say hello as usual. I'm here. That's me. If you want to know my face and who's talking. And for those of you who will be in New York on Monday, I will be there, and I'll be presenting a piece of software I've been dedicating my time in the last 3 months. It's called the FibStalker Console. So if you wanna know what it's all about and you are in the New York area, by all means, please join me. I'll be very happy to show you what we're talking about here, but if you cannot, and most of you will not, I'll present. I'll take a recording of the video and I'll share it on FS Street. So thanks for joining in. Hello, Jax. So let's dive into the charts and let's look at what's going on at the moment. There have been very strong moves, particularly in one of the markets I'm following, and so we will comment on that. All right, so let's look at this. These are some of the markets I'm following at the moment, and obviously you will have probably noticed the strong move on the US dollar Canadian dollar that yesterday actually has respected the area of support, which is this area that comes from 137.65 down to 135.47. Now, when I see these kind of movements, I'm never scared because I've learned to study the market and be patient as well. And whenever a market is within an area of potential support and participation from long algorithms as well as shorts, when that happens, I'm always patient. And for those who are new or have not followed the room in the last few weeks, I have two little positions here, which I have taken when I saw this market dipping into this area with a stop below lows. All right, so if those will be stopped out, those are two risk-free trades. And yesterday we started our discussion on the risk-free trade, so we'll pick that up again and continue. It was a very good discussion, an important discussion of what we ought to do when it comes to manage risk. Okay, so I'm not worried here. Even if this market continues lower here and goes below this level 136.39, I'm not worried. A finished trade means that if you are stopped out, you only pay the cost of trading. You don't pay there is nothing at risk. Okay, and we're going to touch on this later on. So there are some suggestions coming out there. I hope I'm not going to go to quit early again, Jax. I'm not a quitter, by the way. So when something happens, unfortunately, it does not depend on myself. So let's hope that technology is going to support us. I know that FS Street is putting in place safety nets and solutions to avoid that. So I'm glad that medium, long term, we might not, we will for sure not have this problem. Okay, so bear with us and we're going to solve this problem. So I see FX Ambassador, it's right into the action there. GN, which I suppose is the pound versus New Zealand dollar, and we are going to yen crosses. We are going to look into that. Let me comment on US dollar Canadian dollar then. Still not. There's no reason to panic even if this market goes lower. If this 135.54 is pierced on the other side, but that would require still a lot of way to go, then things could change dramatically in this market. On the other hand, this is a call that we made in the last few days. The 065.50, it took a few days before getting there, and then into that area there was participation. I know that some of you are long this market. Congrats, I'm very happy about that. And now let's try to see if we can push this market into the 68.45. That's the level we're looking at. All right, and that would be a 300, around 300 pips move. So if you are into this trade, congrats. There's no reason to take partial profit unless you have not taken some out already to make this trade risk-free. If you have the opportunity, by no means make this trade risk-free. So take a portion out that would actually zero your losses if this market comes back. into this level. Some people are uncomfortable in doing that, and that's a mistake, unfortunately, because it puts gains before risk, and we should always put risk before gains. Okay, risk management before gains. And yesterday we started a very interesting discussion on the reason why we have to manage risk before we manage gains in the markets, and we will continue that discussion later on. So pound versus New Zealand dollar. Then let's go and look at this market. This is not a market I usually look at, so I believe it's this market. I reviewed all the markets, and some markets are not as technical as other markets as well. Okay, you will see that most of these markets are going to correct into their 50% level. So it's just a matter of when and how rather than if. And these levels are common in a lot of pairs here. And as you can see, this market is showing at 215.34, and the level is at 213. So there is still 214 here. So there is still 100 pips to go. It seems small, close, but there is still a lot of way to go in this market. Okay, so that means that there are no immediate opportunities there for a long, but we could actually see some sort of reaction once we get to that level. And these levels are very, very strong. They're very, very reliable as well. And I think I've showed you in the past 2 weeks on the US dollar, Canadian dollar, although it's now piercing into that level, it offered fairish trades, which is the most important thing there. Okay, so let me take some notes here. We started the US dollar, Canadian dollar. The New Zealand dollar, US dollar is also traded along. So congrats to all of you who are trading that. And this market, then there is very little. This is pushing. The daily is pushing lower at the moment. We saw participation at that 219.76, which has the potential to push this price into that level and even below. And we will see whether that level is going to offer support. So on the daily time frame, this market is still a short for another 130 pips. So if you got a short, by no means keep the short until you get into that level, and then you can remove your shorts here. Of course, the market can continue lower, but can also erase all your gains once that level is pierced. Okay, yen crosses, of course. So thanks for bringing this in. It's a small review here. We're not going to review this market, the full review on the larger time frames as well as the smaller time frame. Also because there is no immediate opportunity. This market could actually retrace a little bit and then continue lower, or just continue lower. So in the position where this market is, it's not an edge. This is not the levels where we want to get involved in this market. So I'm not even going to look at it. We want to get involved in the market when the market are stretched, where there are people who believe the market is going to continue higher and the market reverses, or people who are not participating and not watching the important levels. Okay, so we will keep an eye on this in the coming days if anything happens. I think there are the yen crosses that, of course, are of paramount importance here, and I like to connect those to the behavior of the euro dollar as well. It's all connected. If and when the US dollar Japanese yen will start continuing lower, will start its continuation lower, this market will potentially move higher. We identified a level that has not been tested yet. This market is grinding slowly into that level, which is a good thing, because it makes a potential reversal a higher probability. 110.80, it's a level you're going to watch. And the test of this level is going to be very, very important. It's gonna be linked and dictate also what happened in the US dollar Japanese yen. Okay, And the information that we have here is that as soon as this market will find support, and again, it could find support at this level, the euro dollar, but it could also find support at a lower level. So we don't know which level is going to be in play. The market will tell us. There's no guessing we are going to do, because as I mentioned a number of times, I never buy or sell these levels blindly. What I want to see, these levels represent a potential participation long from longer time frames, and surely there are algos that are waiting for price to get into those levels. But price is also pushed lower in this specific context, in this specific market, by algorithms on the smaller time frame, which do exactly the same, push price on the downside. At some point within this area, and that was going to be the first area where we are going to test, and this is going to be the first time we're going to test if the sequence of measure of this move lower breaks because of the effect of presence of algorithm in this area. I mean, we're going to start moving higher. Of course, likewise, we're seeing at the moment in the US Canadian dollar, there might be no participation in this area, in which case this might will keep sliding lower, which actually should produce for the Japanese yen a continued correction higher. Once that low is in place, the relative high in the US dollar Japanese yen very possibly is going to be in place as well. And at that point, we will choose the best setup, and we could even choose both of them, going along the euro dollar and short the US dollar Japanese yen. The US dollar Japanese yen is very, very weak here. Still, there was participation yesterday at a level here that has been holding, and until that level holds, there is a potential for a continuation higher. Okay, that level is an extension; it's not visible on this time frame. It's visible on the 4-hour time frame, and that level has been pushing price higher. If that level keeps being respected, this market is continuing higher. All right, and I have some comments here on the New Zealand dollar, US dollar. This chart is clear. Keep it this way. And I don't know if that was related to the New Zealand dollar, US dollar there. Very happy to be lucky too. Peter, I believe, is probably in the long New Zealand dollar there. Hello, Joe. Got in 65.61, still in it. Jax, very well done. Marco, yes, I'm in the New Zealand dollar in a Philly trade. Very well. Very well done. That's what we want. And congrats. And I'm very happy about that. Now, before we get into the Australian dollar, Japanese yen as well, the AJ that I see Jake has mentioned there. Let me make some consideration of the continuation style. As you know, in this show, I feature 2 trading methods. The first one is what I call the continuation style, and if you're interested, there are some good webinars on FX Trade. If you want an introduction to the continuation method, go on my page. There's the first of this series of 7 presentations that it's open. It's an open webinar, and anybody can watch, and you can get the basic concept of this method as well. For those who actually subscribe to the newsletter, I also give the definition of the system. I have not sent that out. I need to send it to all the newsletter. I will do this next week, as this week I'm very busy with the preparation of the New York Traders Expo. So you'll apologize. I mean, you'll pardon me, and my apologies for that. But I will definitely do that. Now, I think the US Japanese yen is offering a good example at the moment of a potential setup for a continuation higher. And if you know a little bit about a continuation, what happens is that after a move in one direction, there is a first strong move in the opposite direction, then a consolidation, and then a potential continuation. Now, the tenets of the continuation style is that, if we measure the first move 110, 111 here to basically the high that is 114.80, right? It's 380 pips. So from the low that has been identified, we should add 380 pips and look at and what we get. So if the low is 113.40, let's say, and we add 380 pips, it becomes 116, 117.10. Okay, so it comes into that area that we are looking at now. It doesn't mean that the market will necessarily get there. There is a potential here, at least supported also by the FibStalker levels that have got into play here at this level. There's a potential for a continuation high, and this would be great if for a number of reasons. First of all, because it would bring price into an area of strong resistance. Secondly, it would actually obviously give us an opportunity to short this market at a higher level, which is what we are going to what we want right now. What we want, it's just fantasy. It's just pure speculation. We will need to see what the market is going to give us. All right. But however, this setup here gives us opportunities because we can actually study the sequence here and look at what's going on. There is a nice consolidation, and some people would initially look a flag into this consolidation. The point is that as the market develops, the pattern that is being formed also evolves as well. So although this is not confirmed, we would have a triangle forming here. Okay, and so this is very interesting because it gives us the possibility to apply some of the techniques that we have. And the interesting part of that continuation style series, if you have the opportunities, or if you're a subscriber of FX Suite Premium, I recommend you have a look at that. If you're not a subscriber, I recommend you strongly you get a subscription, because there are hundreds and hundreds of fantastic presentation, and my material pales to compared to the amount, the wealth of information that you'll find in the archives. Now, when we look at this opportunity here, this is the way that the standard and classic, the classic setup in the continuation style suggests. So once you have identified the trend line that actually identifies the breakout and in the direction of the trade, of course, in this market we are looking for a continuation higher, not because we want a continuation higher, but because we're just applying the rules of the continuation style. The continuation style is suggesting there is a move higher. Sorry, it's telling us that there was a move higher, our move number one, and now we're in a consolidation, move number two. The move number two would be in the direction of the move number one. And we also measure the equal move there. We say it is 380 pips. All right. Will that happen? It's something different. If it happens, though, we have to be ready. And one way to be ready is basically this one. This is a totally different setup compared to the intraday system and the setup using the FibStalking time, which is the timing mechanism that I use on those levels where algorithms get involved. This is more traditional, but still very, very effective. Now, if you review that series on the continuation style, what you're going to learn is that the way I time this is that ideally we want to see first a break of a previous high that's within the formation, the consolidation formation. Okay, then you want to see a higher high being printed after that level, and then the breakout of the new relative high would be the actual entry. Now, obviously, the market is not always that that educated, right? I mean, sometimes the market will just break higher and continue higher. So we have some hints, for example, a higher high already being printed here, and in that webinar, in the last of the webinar of that series, the series on the continuation style, also show a way to optimize the stop loss. And instead of putting the stop loss below lows here, we put the stop loss below that 61.8% level. That usually is not retested. So my study and my calculation show that can give a 100 to 120% increase in the reward to risk. And actually, there is a very sensitive increase in the expectancy as well, in the order of 80%. So this little change here that moves the stop from one level to the other can be very useful. So one way to play this breakout, if it happens, is to wait for the 114.50 to be broken on the upside and then put the stop below 113.79. Okay, so we will see whether this market will follow up on this setup, and you can monitor that. Where we want to bring this price, we want to bring this price into at least 116.30. That's a level that we mentioned yesterday, and it's something that we are going to look at to see whether we're going to have some participation on the short side. Okay, so we reviewed US dollar Japanese yen here, and we also showed a potential breakout play with an optimization of the stop loss below that 113.79, and that's a way to play that market. All right. So we have Jax got 65.61. I think that's again related to the other play that we mentioned yesterday. So congrats to all of you who actually have taken the opportunity to trade that market, and that market has a potential of 300 pips. And here we goes. The reason why we traded this long is because this market is traded weekly longs as well. They're not visible on this time frame, but when you go back this area here around 63.50, it's a level where an area of potential support for this market has started, and we saw participation here, big move higher, big participation of algos. Algos came back, retested the level almost to the pip, and then now after second test there is a commitment there, and that's the reason why we traded that 50% level into a potential 68.45. I wouldn't wait for higher than that. Of course, this market can go to the second target, but I wouldn't wait for that. I would actually take profit here. Good evening, Scott. I think that the list here it's growing. I'm very pleased. Welcome, Femaon, Osmin, or I should say Osmin Jane, and Jake, Peter and Pan. We have as well Peter Pan and Toad, Adinda, Joe. Todd, of course, rather. Maybe it's better. Mystic, Graham, Marco, Kerry. Welcome, Kerry. Lucas Roland. Lucas is asking, can we please have a look at gold? It looks like it's done with the resting part and ready to go up again. Cheers. We will. I just want to look at AJ. This Jake has asked for that before, and Joe, I think you might be right there, Lucas, sorry, in relation to gold. We're going to review that. But before we get into that, it was Jake that asked for the Australian dollar Japanese yen, which is one of the markets I follow here. This market is hovering around this 50% level here, has been tested once. And the problem of this market is in trading long is that we always have to put things in perspective, guys, and that's very, very important. Okay, we have to go back to the weekly and select the right market and then study and see what's going on. If the trade comes in the direction of opposite the direction of the path of least resistance, I will not be very much inclined to trade in the opposing direction, especially when things happen on the weekly. And look at what happened on the weekly here. It was clearly participation on the long side. Am I going to trade shorts here? Not at all. I mean, this short might still work. The point is, it's not a high probability short for me. All right, and it's very good that this was brought on here because it gives us the opportunity to understand why sometimes, I mean, we apparently behave randomly. Right, this is a level that found participation clearly. Found participation on Monday for a short. The market has retested that level, which still shows strength, suggests to me that this Japanese yen is not done with its correction and is affecting this market as well. And now it's finding resistance again. Now, could this be it? Yes, it could, of course. The point is, am I interested in trading in the direction opposing the weeklies? The weeklies might come into play much lower here before they maybe, decide to give another stab at longs. However, we are trading against the path of least resistance. So although there is a potential short here, I don't know if Lucas, that's what you were looking at. Sorry, that was not Lucas. I'm making. You are growing, guys. I mean, there's a huge number of people here. So that was. Sorry about that. That was Jake. Jake, if you're looking at a chart here, there was a participation there, but this would be a counter trend trade. So I'm not interested in that. And you can take a stab at it for sure. I mean, it really depends whether you are short-termed or not. I really like to see my setups on the 4-hour and have very good prospect for those setups as well, which means I have enough room for those to work. Look at what happened at the Australian dollar, US dollar on the other hand, and it has been trading at the same way. Jax, thanks a lot. You're very kind. Thanks for your kind words. The point here is that look at this Australian dollar, US dollar. Once we were there, hard right edge, we didn't know what was going on. This market has the potential to set up for a short there. Indeed, it gave that setup. And I remember we were looking at the market at that night. It was Monday morning, actually. Monday morning for me was 2 a.m. because the first 3 days of the week I look at I trade the market, trade the US, the European Open. So I decided not to take the trade. I had one of my students taking the trade in the room, and I said, it's good. He gave a finished trade to him, and it was good. Was after all a good execution, good trade. I think he took 8 pips risk or something like that. The point is, this market was not convincing for similar reasons that I showed in that chart. Okay, so that's the reason we want to avoid that. And then the market, the market follows up, and then the next day, bam, is going to stop us out and back at the level. And now we start asking ourselves, what should I do? Should I retry? Should I re-enter? You are flat, you are even on that trade because you didn't. If you apply consistently the risk-free trade approach, you will always be come out ahead in a way or not behind. The point is that now you start asking yourself, what should I do? Should I enter again at that level or should I wait? And whenever I don't get a desired move, I just step away. Okay, and that would be my suggestion for that Australian dollar, Japanese yen there, which I'm gonna take a note here. So Next come gold. I like to look at gold and silver, very technical markets, and in a way they represent different asset classes. So, well, not they represent, they are actually different asset classes, and so it's also important to review them, to correlate them to what's going on in other asset classes. For example, there is a clear link between Forex, stock, and commodities when it comes to gold and silver, the SP 500, and for example, the euro dollar, or better, the US dollar Japanese yen, with the carry trade and potential risk off, as you will read from my articles as well. So let's look at gold. The gold has been relatively stronger when compared to silver, which is by itself a tell. I believe that gold, and take my words with a grain of salt, but I think that gold and silver have been manipulated downwards. And a lot of people, and I myself, didn't realize in the past that there is much more silver and paper silver and paper gold than what there is in the quantity of the actual commodity. So that means that if you have a lot of paper that does not have uh, uh, an underlying, because you will never, or in some instruments don't even allow you to ask for the underlying. When you have 5 times the number of contracts that represent gold, then if you short the contracts, you can actually affect, at least temporarily, the price of the actual commodity. And this, I believe, and again, take this as a grain of salt, because I don't have a crystal ball, and this is an opinion, by the way, and I don't trade opinion. I trade these levels, and I believe I gave you these levels, this level in a few days ago, and that's an extension. And yesterday we saw that market stopping at the extension, and again today we saw participation at the level. Is this level going to hold? Sorry, I'm looking at silver because this is clear, but I've been asked to look at gold. Gold is much stronger, but it's actually trading a similar pattern. Now, the pattern in silver, it's very technical and much clearer, while in in this market there is a jumping extension in play, and I explained jumping extension in that are way to identify anchor before the fact in my FibStalker Methods coaching program. So if you are interested, by no means join. I'm having some new students joining as an effect of this analysis, and this level has not come into play here. So gold might suggest that it's gonna be a little move lower here. And interestingly enough, look at this. I mean, a lot of people will see this as a retest of previous highs, but that's not the case. That level is there for totally different reasons, and it's being followed by algorithms um, as well as professional traders and smart money, and you name it. So these levels are real, and we get participation. Now, what I'm interested in these levels is getting a fair trade, because the market can do anything, can go my direction, can go opposite my direction. But if I manage risk, in the medium long term, I'm going to come out a winner. Okay, and you can do the same. Now, if this 1188 has not been tested, this would suggest me that maybe also the silver is going to retest this area again until gold retest the level, and we will see whether there's going to be participation. Uh, Now, which of the two is driving here, we really don't know at the moment. We don't know if silver has anticipated a move in gold, and whereas gold gets to the level where that participation and that money, potentially millions and billions, are ready to buy gold, the price of gold will go higher. Or if gold drives the show, which we don't know, in which case, we could see silver keeping slipping down. But this market is clearly showing a changing character here. Now, the changing character in itself is just a qualitative observation, and I don't trade with qualitative observation. They're not very useful if you think about it. We need levels, we need entries, we need stops, we need tools that will help us to decide when it's the right time to get in, and of course, if people keep looking at the old instruments, they will always see things like this, right? They will always see, you will always find a trend line that works, that has at least 3 touch points. But then, is this real? In a number of occasions, as I observed, I showed like participation at the level indicated by algorithm is much more important than breaks that are given by simple trades. And rather than actually identify changing character in this market based on a breakout from a simple trend line, right? Very simple tool. I would rather look at other markets that might be positively or negatively correlated with this market, and one of them is definitely the SP 500, which is pushing higher because the US dollar, Japanese yen, I believe, is pushing higher. See, this market did not find strength. The first time it has tested this area, 1857, did indeed find strength in that area. But then when it was retested, right, this price went very, very deep into this area and was saved. Maybe it was saved before a break of that level. And now, for those of you who look at this level for the first time, you might think, okay, what's the meaning of this? But as you look at this thing time and time over, and some students here with me now, probably more than almost 1 year and a half. I mean, they've been looking at these levels working again. So these levels are real. Okay, if we break the 1800, the 1797 there, that's very, very meaningful to me. But that didn't happen yet. All right, and however, I mean, this market is not showing strength. And now the point is, when everything is connected here, whenever SP 500 start reversing, US dollar, Japanese will start reversing, and the pound, the gold and silver that already have started that move higher and potentially have changed their character will start moving higher. So we'll have a lot of hints to understand when the time comes. All right. So please take a look at the pound versus dollar. So does this? Sorry, I had before. I think it was Lucas. So Lucas, to then conclude and answer your question, we still don't know if that resting is completed. I would say no, not yet. And despite this market is very, very close to, let's look at the daily. It's very, very close to that level. That level has not been tested yet. So this resting is not be completed. Okay. Now it's interesting again to go on the smaller time frame and look at the shape of this resting, looking at the patterns that the continuation style identifies, right? And here it's interesting because we are looking for, on the larger time frame, we are looking for potentially a continuation higher here, and so we are looking at a break. But look at how beautifully this market on the smaller time frame, on the other hand, is showing a potential for a small continuation lower before we continue higher, and that would be comparable. And that's the beauty of when these methodologies kind of match each other. They'll be compatible. This is a higher level here, which is only visible on the smaller time frame. The ones that and that's definitely in play. There are some algorithms that are attached to that. But the point here is that While on the larger time frame, we are looking for a flag, basically. The smaller time frame, due to this drop that came suddenly here 2 days ago on Monday, we actually have here the potential for a brief continuation lower into the next level of support, which is very, very interesting, which put us in a situation now where we can study this move here, which is someone who called this ascending triangle. And if you review the material on that course I created online, again, it's the continuation style. I also speak and give some probabilities of these patterns working that are aggregated, and in fact I also give you the source where you can get all these probabilities very well spelled out and very well studied. But what I noticed in the past is that these continuation patterns, particularly the ascending triangle as well as the descending triangle, have a very, very high probability of touching the target above 60%, and a very, very small probability of retesting the entry point. All right, so what is interesting here is that this market could continue lower here then. So again, I'm going to give you a potential entry below 1203 with a stop. We're going to use the same technique, and with a stop above 1213 here. Okay, so write it down and let's see if that is capable of bringing down price into that next level of support. So I think gold was a very good opportunity today to also have a look at one of these at these two setups, and very interestingly how on the daily we have basically a flag, or if you want, we actually the opposite. We have an ascending triangle, right? And then when we move to the analysis and we go down the smaller time frame, particularly the 4 hour, we discovered that there is a totally different pattern, which is actually brought about by the behavior of price on the larger time frame in the previous day, whereas we saw this strong move lower, and we're seeing now consolidation and potential for a continuation lower here. Okay. So this is very interesting here, and we're going to see what happens in this market. Let's look at the continuing here. Joe, please take a look at pound versus the Australian dollar here. Again, this is not a market that I find very technical, but I will look at this. I see also other comments. I see more down in the yen crosses. Absolutely agree with you, FX ambassador. I think everything is pointing to that. So US dollar, Japanese yen. To me, that means US dollar weakness and a relatively strong yen there. Because the market can do anything. Sensible risk management. Thanks for restating that, Peter. I think that's very, very important. So the GBP Australian dollar here. Let's have a look at this market. Let's see what this market is telling us. I wouldn't be impressed. I'm not impressed when I see this market push lower. Look at what happened yesterday. At some point, this market was a big red bar here, and we were here at 113 asking ourselves, "Oh, did we see the relative high?" No, we have to be trustful and wait for these markets to set up. Otherwise, we'll never get the big opportunities that we want. So Pound versus Australian dollar is showing strength here. This market looks interesting. There is a lot of potential, in this market. If I look at this market, not even tracing extension, I know and measure move. I know already that this market has broken its um, long-term move here. And I don't follow this market, so I could not possibly have reviewed that. And I'll trace only two lines here to show you what I mean. One is this one, and the second one is this one. And this market is gone. Longs are gone, way gone. Okay, so this market is being controlled by shorts. And in a way, it is not technical because, well, this market is showing a typical pattern that we see when markets are not technical. And with my methods, it would be very difficult to find opportunity consistently in this market. But after the fact, because I want to trace this, and I usually trace this level before the fact, not after the fact. After the fact, everybody can do that. Everything it's easy. But after the fact, because of this lack of technical movements, at least on the weekly time frame, because then on the daily time frame, this market is can be technical as well. But what we're seeing here is that a continued push into 198.12, and this can continue into 192 here. So this is a short that has a potential for a continuation lower. If you got somewhere in during this move lower, the first target I would start considering would be 198.12. So if you're short in this market, Joe, there is no harm in bringing that level a little bit lower there. And the point is, it's not a level or an area where we want to open and start new shorts. Because see, when people see this kind of move, they start getting excited. But there is one thing that I wrote also in one of my review, which is, if you see it and if you're not in it, the move has ended. And that's exactly what we are seeing here. So a lot of people would be tempted to try to enter into this market, but into this market there are also a lot of shorts, and before or after those shorts, we want to take those profits away. So this market can actually rally in our face without us knowing it. In reality, the kind of level we want to trade really are this level where the market reacts, and we want to enter using some of the proprietary techniques with very small risks. That's what we want to do, and actually that's our plan for the US dollar German yen as well this week. So we want to see this market correcting possibly higher if that opportunity is given, and then once we get into one of those levels that in which there is where there could be strong participation on the short side, we start timing, trying to get a finish trade as soon as possible, and then try to carry that finish trade potentially. If the market moves that far to 170. Okay, so that excuse me. That's the kind of trade we are going to look at. Pound versus the Australian dollar at this stage seems a little bit too far. All right, so very good. So I think we're very close there. Let me do a time check here. It's 8:54. So what I'll do, I'll start a review of this session right now, and so we start from the US dollar Canadian dollar, this carry move that happened today. This was a Wednesday bar. Thursday bar has been started here. Will it continue lower? We don't know. I have a free trade below these two free trade below these levels, and if that level is taken out, peace, we will need to wait. Now, is this very different from what happened in the past? No, because these levels were taken out in the past as well. one, two times, one time, two times before the market could continue higher. Will it happen now as well? I don't know. Am I worried? I'm not worried at all, because when that's the power of having a risk-free trade. I can sleep. I have no problems. If this is stopped out, I'll wait for the next opportunity. So, and then next opportunity might come the next day, right? Even in these markets. And you can make all the observation you want in the world in relation to the correlation between the market and what a market should be doing or not. But the reality of the fact is that I've been observing these patterns for years now, and I always trust trading a level rather than doing an assumption of how a market should behave. Okay, and so unless we have very, very strong relationship, like the euro dollar versus the US dollar Japanese yen, that is very often one opposing the other. Sometimes there is one liar, but very often they trade one opposing the other. So New Zealand dollar, there was a good trade there, we called yesterday. This trade keeps working well. No reason to be scared or afraid about this trade. Keep it. Trade it to the moon here. The moon is going to be 68.45. No reason to exit this trade before you get there. Even if he gets to previous high and start going against you, stick with it. Okay, stick with it and wait. There is a potential for 300 pips there. So very good opportunity there, and congratulations for taking the trade. The next level we reviewed, of course, is our US dollar Japanese yen. We actually made some consideration on how this market is related to the US dollar Japanese yen, as well as the SP 500. We also showed on a smaller time frame how it is possible to consider an opportunity on that market on a smaller time frame. We showed also the timing using the FibStalking time. Sorry, not the FibStalking timing, but rather the continuation setup here, and we observed that there is actually a consolidation in this market happening at the moment, and this consolidation could well resolve on the upside here. It's a symmetric triangle or ascending triangle, however you want to see it, and this could bring the opportunity to continue only if we break above 114.50 level. I then was asked to review the Australian dollar versus Japanese yen, and this market has been showing some resistance at this level. The point is that we also showed this market on the larger time frame, and I showed you that there is support here. Trading shorts would be trading against the path of least resistance, so it's a losing proposition. So this market is to be traded on the long side, not on the short side. And then I was also asked to review gold and silver. Of course, they could be very, very close to the end of that cycle, and we don't know if gold is leading here, or rather silver is leading. Silver is at support already, gold not yet, which suggests that maybe silver has to correct a little bit more. As we mentioned, the SP 500 is going to tell the story. Strong move higher on top of that area of support that we observed, we know that area is there, and I just want to try to see if I can look at the daily here and show you the daily here. And as you can see, there were 3 days of strong reaction higher. This market might come into the 50% level, and we will see what happens there. But gold and silver have not found their bottoms yet. And finally, I was asked to review the pound versus the Australian dollar, which is a market that it's moving lower. It's not very technical. In fact, that's one of the reasons I don't follow this market. But this market has a setup short with target in the 190 with, I think it was 192.93 area. Let me retrace that again. This is a typical pattern that we see in this kind of markets. I don't enjoy trading these markets. 198.26. That would be the first target that we're going to see in this market. All right. So, okay. So this is it for today. I hope you enjoyed the show here. This is FibStalker signing off, and I still believe that the coming weeks are going to provide very good opportunities for shorts as well as longs, shorts particularly for the US dollar, Japanese yen, and the Japanese yen crosses, and longs for some of the market. New Zealand dollar, US dollar is moving higher already, and the euro dollar will soon follow. So if you liked this show, and if you think it's adding value and it's giving value and confirming some of the moves, as well as giving entry points and target points, which is very, very important. Sometimes having target points and target levels very clear in mind, it's even more important than entry points, because if you're not able to capitalize on a move, we can be 100% right in the entries, but if we never take profits, or we don't take profits at the right points, trying to maximize, it's very difficult to consistently be a winner. So thank you very much for being here. If you like the show, please tweet to your friend, tell your friend. Let's grow the local community here, and you're going to have a lot of fun and a lot of ideas as well. The more you will be there, the more packed is going to be the show as well, with multiple pairs being analyzed, and that sometimes gives a heads up and a edge to myself as well, because I tend to follow 8 to 12 markets, but sometimes it's a very technical opportunity in one of these markets. So I really appreciate you bringing in your ideas. So thanks a lot again for being here today. I'll see you in New York on Monday, but before that, of course, I'll see you tomorrow for our last session of the week. After that, I'm leaving on Saturday morning to New York, and there'll be some changes, probably Sunday. I'm not sure whether we are going to have the session. If we will, I will do it from New York. So thanks a lot, and have a great evening. Bye bye now.